Hi, everyone. In this presentation, we are going to review HOSP215, Hospitality Accounting Concepts. And these are the main points that we covered that we will be bringing into the next course, which we're taking this semester together, events or EVNT 315 management accounting for events. So we're going to get really specific. We're going to start to build on everything that we've learned from HOSP 215. So what to bring into this course from HOSP 215? Remember accounting definition. What is accounting? I said this time and time again over the course. And can you finish this statement? The language of business. Okay, this is math and English coming together. So if you recall that you're not only looking at calculations, and it really isn't difficult math, it's simple addition, subtraction, some multiplication and division, but it's knowing what numbers to use and the terms associated with those numbers, whether they're account names or their account categories such as debits or credits and things like that. So it's bringing both of this together and learning that language of business, which is accounting. And we're going to focus on that in EVNT 315. So here's just a few more points and explanation of what this means exactly. So something to remember, and I specifically point out international students because I know there is some difficulty here, and I want to show that I do understand in the sense that we're working with Canadian currency, dollars and cents. So you're going to two decimal places, you're rounding appropriately for that zero, even though we have no more pennies. Some people might be saying, why aren't we just using whole numbers? We still want to be as specific as possible to those two decimal places and rounding up or down appropriately. Okay, we did that in HOSP 215. We will continue to do that in EVNT 315. Sometimes we round it off to whole numbers in HOSP 215. We're not going to do that here in this course. We're going to be specific with Canadian currency. Okay, and we're going to be looking at comparing the different amounts in different areas of the business to see whether it's doing good or bad. We touched on that in Chapter 7 in HOSP 215, looking at the operating ratios and some of the hospitality metrics. Didn't focus on it a lot. We're going to be spending a lot more time on it in this course. One of the things I can think about is when we looked at the current ratio and we were comparing our current assets to our current liabilities to see how that plays on how good or bad our business is doing. We're also going to start analyzing those numbers, what they mean. We're going to look for opportunities to make a business better, whether you're working for a business or whether you might even have your own. And this is considering into the future. I know some people have put into the introductions already that you're looking at wanting to have your own business. So it will be important to look at the numbers and what they mean, those calculations that we're going to learn. So you're also going to compare your finances with other businesses because events is very competitive, just like any other business. Something else I kept mentioning in the HOSP 215, and I hope you walked away with this being in your memory. And if not, I'm going to keep doing it in this course. So, not to worry. The basic accounting equation is assets equals liabilities plus owner's equity. So, if you associate numbers with each of these, the assets, whatever that number is, it is going to equal whatever number is in your liabilities plus owner's equity. So those two numbers that are associated with those two categories would have to equal the total of the assets. If it doesn't, something's wrong in your business. So it gets very logical. If you have a logical way of thinking, it's going to make it easier. But if you also have a creative side, you're going to be able to bring that creative side in as we focus on the whole financial management, specifically with events. So financial statements that are used in accounting, if you recall from chapter 2, we started to get into this and we looked at an income statement. statement of owner's equity, and a balance sheet. So the income statement is looking at your net income or net loss. We're going to start to look at the synonyms more of what is used in industry, in the event industry. We start talking about profit and loss, or P&L. We'll even look at them as P&L statements, but from an accounting point of view, looking at generally accepted accounting principles, when you're filing those documents at the end of a fiscal year through an accountant, they'll call it an income statement, but during the year you'll probably just be looking at it as a P&L, or profit and loss. But it's still the same calculation: revenue minus expenses. You always want to have the revenue up here, the expenses down here, because in between is going to be your profit. Statement of owner's equity. It's going to be looking at the owner's capital at the beginning of an accounting period, perhaps a month, the beginning of a month. Any investments that are added into the business from the owner or owners, if there's more than one. And then any drawings, any money that's removed from the business. Remember, this is a legal requirement that the money is not the owner's, it's the business's. So if the owner wants to take some money out, they by law have to record it as a transaction that they're withdrawing that money, because it is taxable. So that gives you the ending owner's capital at the end of an accounting period. So beginning of the month, end of the month, and that end of the month will carry into the next time, because we're looking at perpetual in the accounting system. The balance sheet is just a review of the basic accounting equation. Total assets equals total liabilities plus owner's equity. We look at all the accounts that are in assets, add them together. We look at all of the liabilities added together and the owner's equity. Those added should be the total assets. Okay, and we're going to be doing some more examples. So just in case you're still a little foggy on it, we spent 14 weeks on it in HOSP215. We only spent 14 weeks on it, 3 hours, and we're going to spend more time reinforcing it. There was the accounting cycle, steps 1 to 9. Now, unfortunately, my camera is covering a little bit of that, and it doesn't look like I can turn it off just for a moment, so that you can see that steps 1 to 7 is usually performed monthly or quarterly. So we just go through like a mini cycle, but steps 1 to 9 is performed at the end of a fiscal year. That's 365 days, no matter what day your business started. 365 days later will be the end of your fiscal year, and you'll reset your drawings, your revenue, and all of your expense accounts to zero, so that you can start looking at your business on a clean slate. However, you still will have all of your other asset accounts, liabilities account, and your owner's equity capital in the numbers that are carried from the previous fiscal year into the next one. Ratios and metrics. Now, this was chapter 7, a little bit of chapter 8, and in HOSP 215, we're really going to start delving into this in greater detail. And this is where you want to remember that ratios are financial. They're looking at dollars and cents, and they're comparing those numbers, and you're usually getting a comparison in the sense that it will be in a percentage. Okay, you're going to take the small number, divide by the large number, and times 100. So for people that don't like math, just remember the small number divided by the large number times 100. Metrics can be a little bit different. This is when you might be taking a dollar figure and you might be dividing it by another number, something that you don't know what it is. And I'm going to turn my camera back on. Just sometimes people who are visual like to see how I'm talking, so that my hand gestures will help to make sense of what's being talked about. So the measurements through these calculations together will give you insight on how your business is doing, what you're doing right, what you can maybe improve upon, and maybe what you're doing wrong. So, and I say you, just in the proverbial sense, what the business owner would be doing. Let's take a look, delve into this a little deeper. Here is an example of a type of ratio. This is a very important ratio because labor costs are usually the biggest expense, wages expense, in a business. And if you think about it in greater detail from Chapter 8 in HOSP 215, we're not just looking at the wages, the hourly rate times the number of hours worked, or a salary that is paid to an employee. We're also looking at related expenses. And a business owner is also responsible for paying a contribution to an employee's Canada pension plan over and above what the employee has deducted from their paycheck. The employer has to make a contribution. So this all goes to the government account for that individual, for you when you're working. Whatever you're being deducted from your paycheck, there's also a contribution your employer is having to make over and above what they're paying you. Same with employment insurance. And the employment insurance, if you remember, and I hope some of you do, it's actually 140%. It's not equal um, to what the employee contributes. It's actually more. So an employer really does have a lot more in labor costs than just the employee wages. So just to remember that. So this is expressed as a percentage. And in different businesses, there's usually a certain percentage for labor cost margins that show whether a business is doing well or maybe not so well. Maybe some good decisions are being made about how many employees to have or how much to pay those employees if you're doing so properly, and the revenue that's coming in, the money that you're bringing into the business. So we have to remember too that we're even going to look deeper into this, not just a simple income statement of revenue minus expenses, but we're going to look at operating revenue. And that's very important, especially in events when you're maybe looking at purchasing items that are going to be part of the event. And that needs to be considered the cost of goods sold. You're providing meals, you're buying the food that you're going to create these wonderful meals at an event. That's going to be something that needs to be removed from the revenue so that you're just looking at operating revenue, not just general revenue. Labor cost margin. An example of this, let's take a look and see with $40,000 in a month in revenue, the cost of the wages, including related expenses during the month is $25,000. So that would be the wages that are paid to the employee plus the CPP and plus the EI. CPP, employers contribute 100%, and that's the way it is in Ontario, and 140% for EI. So it's not just the money that's being paid to the employee as gross wages. So let's say that's the case. We're going to take the smaller number divided by the larger number and times 100 to get a percentage. 62.5% is the example for this. Now, let me just ask you a question when we're looking at this. Is this a good number or not? And you might look at that and go, I have no idea, and that's okay. This is where you could Google it. This is where AI can be very helpful in getting an opinion. And this is where I am more than happy to see you using it to get advice. You need to remember AI, the validation of the advice. You might want to go to different sources. But on the whole, depending on the type of event, you would want to look at a certain percentage of labor contribution to see whether this is good or not. So I'm not going to give you the answer yet. We're going to talk more about that as we move forward. So just to remind you that a smaller percentage means a more efficient labor. So is this good for events? Maybe it is, because events is very labor intensive. Maybe it's not. We don't know yet. So ask yourself that question. Feel free to go into AI. You could pause this video. You can look at that, and then you'd be able to move forward with sharing your thoughts later on. Okay, so we looked at a ratio, a financial ratio. Let's look at a metric, okay, an operating metric. This is where we're not getting a percentage, okay? What we're doing is we're actually getting a figure that we can look at, and it becomes more objective in realizing, is this good or not? How is our business doing? And should we be making certain decisions? So the number of guests per server would be the measure of the workload servers have, and it also would be a measure of the quality of guest service. So you want to make sure that you're not overworking your server, your guests are perhaps not getting their meals served to them properly or on time, or you've got the right number of servers, the guest service is excellent, and everybody's being served on time. I don't know how many of you have been to a function such as a wedding, and not enough servers have been hired, so the people who've been served first are finished their meal by the time the last group is being served theirs. It's not good for quality. Okay, so when we're looking at the number of guests at an event, between the number of servers being considered for service, we have to think about the money that we did with the financial ratio of labor cost margin, but we also want to make sure that we have the proper number of servers. So number of guests at an event would be something to take into consideration, and dividing it by the number of servers we're considering for the event. Okay, so I'm just turning off my camera just so that everybody sees what's there in the presentation. This will also be available online. So here's the example. Using that same number, $40,000. We're having an event company. We have $40,000. We just made that 1 month in revenue, one event. Okay, 1,000 guests are in attendance for this event. Let's say it's a wedding. The event planner decided to hire 50 servers for the plated meal service. Okay, so it's sit down. They're going to be serving the meal to the guests on the table all around. So 50 servers. Off the top of your head, do you think that this is a good number to have? Or do you still maybe think you need more information? Okay, so what we're going to do, the actual calculation that will help to guide us and make sure that we're doing this correctly, and hiring enough servers for the 1,000 guests. And really, for this particular calculation for the numbers, we don't need to worry about the $40,000. I just kept that in there just so you could see the continuity, but we're not using that number in this particular metric because it's not financial. So we see that if we have 1,000 guests and 50 servers, there's 20 guests per server for plated meal service. And I know some of you actually do have some event experience. You might actually know the metric, the common metric for plated service at an event is. Is this a good number or not? If you had budgeted $10,000 for the server's wages, would this be good? And let me turn off my camera for the business. And one of the things that you might want to remember is if we're looking at the financial ratio of the labor cost margin, that was for everybody. In this case, we're just looking at the servers. We're not looking at the chefs, maybe some of the administrators, organizers, maybe some supervisors. This is just servers and the wages along with what you have to make contributions for. So what is, going back to the labor cost margin that we calculated before, what would be the typical labor costs for an event? So you could think about that as a percentage, which is a lot easier than thinking about the dollar figures and the thousands of dollars. And that's one of the reasons we do those financial ratios. So those are things that you can Google. You can go into ChatGPT, Copilot, whatever you like to use as your AI companion for reference. You may even just want to Google it and go and do your own research, and that's okay too. In fact, I'm still stuck on doing that many times. So I'm not going to give you any of my findings right now. This is where we're going to do another comparison later on, and I'm going to be putting something up into the course shell just to ask you. Now let's move forward. You've probably have almost heard enough of me already. Cash flow statements. Now you'll notice this slide is pretty much blank. This is how cash is acquired and used during a financial period, whether it's a month, a quarter, which is every 3 months, or a year. So this is pretty empty. That's because it was only briefly covered in chapter 7 and 8. It should have been covered more in HOSP215. We're going to be looking at this in greater detail in EVNT315. So, there's still a lot to cover over the next 14 weeks. So you may be thinking, oh, well, we already learned all that stuff. That's good enough. No, this is where we're going to get into cash flow statements. We're also going to look at operating statements. So let me turn on my camera again. Looking at revenues and the distribution of expenses from different profit centers in a business. What is a profit center? That is an area, maybe a department. If you think about an event center, they may also be like a hotel where they have accommodations. So that would be one profit center. They may have a restaurant. That'd be another profit center. They may have an entertainment center. They may also have the catering or center where they may do offsite. And then they might actually have the event center where they actually hold events. So there's a lot of different areas. And it's good to see where you are making your money, but where you're also money's coming in, but where the money's going out to, and you're having to pay for it. That's why a lot of businesses tend to transition from one thing to another. Okay, and just a reminder what we finished off with in HOSP 215. I've already mentioned it previously, but payroll and related expenses. We're going to be focusing on this in greater detail as well, because many of you, when you're getting into event planning and you become the planner, the manager, or the event company, the event business owner, you're going to be looking at the wages that you pay your employees. Usually it's an hourly rate. You might have the odd person on salary, but chances are they'll be paid because they'll be contract and you just bring them in for events. They'll get paid and then they'll be released again until the next event. So you have to pay them their wages. You also have to deduct CPP, EI by law. Those are the statutory deductions along with income taxes. So those are the 3 statutory deductions, but you will also have to make a contribution over and above what you've deducted from the employee's pay towards their CPP. You'll also have to make a contribution for EI, 140% of whatever you've deducted from their pay and put into employment insurance. There may also be other benefits that you might offer as an employer to attract good employees. Some people do health benefits, dental, extended, you name it. So there's a lot of that to consider, and that's usually with bigger companies, not with small ones. With small ones, you still have to do the deductions of CPP, EI, along with the employer contributions, and then there's the income tax deduction for employees, but there's no contribution the employer has to make. Okay, so we're going to be working on that. We're going to be doing applied assignments, and I hope you're really going to enjoy the course as we move forward. Before I finish this recording, everybody, I just wanted to mention that when you're seeing this course develop, it is in a redevelopment stage, and I am updating it with Universal Design for Learning practices, and you may see some of the assessments and group assessments especially. I know I'm a big person. I like to work on my own. I'm a believer. I want to give you the opportunity to work with people if you want, or not if you want to work alone. Different people like to do different things and focus on different strengths and weaknesses, things like that. If you feel that that's the case, then that's okay. So things like that are changing. I'm also incorporating more Excel because our employers have told us that our students need to have more Excel knowledge. So we're going to be looking at that more and just making it a good quality experience with updates such as AI. So any questions, I'm just an email away, and we can always meet online in a class meeting. Take care.